just turn on. The recording just started. So at this point, I think Greg is probably going to kick it off, but let me bring it up here. Okay, Greg, why don't you just get started? Because we'll need all the time we have.
Yeah, sure. Do I just need to, are you flipping the slides for us?
I will flip the slide. All you guys got to do is say next slide, or if I get lucky, I'll flip it even before you ask.
Okay.
So let's see.
Okay, so here you can just have like a quick look of all the different contents that we're going to talk about over this presentation. We're going to start with the background and mission of Ford. So just to give you a quick background, Ford is a company that is located in Dearborn, a suburb of Detroit in Michigan. It is an American car maker that is one of the biggest in the world. It was created in 1903 by Henry Ford, and they have divisions that are located pretty much everywhere in the world, such as in Asia Pacific and all the blue regions that were identified on the previous map. Now we're gonna get started with the products and services, but before that, we need to know that Ford operates in 3 different segments. The automotive segments that compose the different vehicles, parts, and accessories related to Ford's operations. The mobility segments, which concern autonomous vehicles and related businesses. And finally, the Ford Credit segment that is more about all the financial service that Ford is proposing. Here you can have a look at all the different products that Ford is offering globally. I'm not gonna go through them all, but I'm just gonna let you know that the pictures are the Ford Fusion and the Ford Fiesta.
I guess this is the first category, which is cars, right?
Yeah, the cars.
And now
it's all the different SUVs and crossovers. And the picture at the top is the Ford Explorer and the bottom is the Ford Edge. Same thing for the different trucks and vans that Ford is offering. The one at the top is the Ford Transit and the one at the bottom is the Ford F-150. And after we've looked at all the different products that Ford is offering, we need to identify which is actually Ford's most popular car or product. And so far, it is by far the F-Series pickup, which is Ford's best, most selling product. And if we want to go more in deep, we can even say that it's been the Ford F-150, because it's been for 39 years straight the best-selling vehicle in the US. And as the graph on the right is saying, Ford is currently leading the pickup truck market as they have 32.4% of the market share. Here you can see the different services that Ford is offering. But since Ford is selling cars, it's not actually services, but it's more services that you can get after you buy a car. And some of them include the Ford One Call, the Ford Roadside Assistance, the Rent-A-Car, Ford Pass, and the Ford Protect Extended Service Plan. On this slide, we can have a look at all the different Ford's assembly line locations. And as you can see, it is pretty much everywhere in the world. And each manufacturing plant supports different steps in the manufacturing process, which allow us to now talk about Ford subsidiaries. And in all of these different areas, Ford has partnership with businesses that sometimes are not only car related. And for example, they have some technology-based subsidiaries, such as Ford Global Technologies, which is mainly managing everything that concerns Ford's intellectual property. They have Ford Performance, which is when they use the technology that they put into the racing cars to after that install it in the cars for everyone. And then finally, there's the Livio software, which is what enables us to connect our phones to the cars. On this slide, we have a list of all the main Ford subsidiaries. And as I just said before, there isn't only cars related subsidiaries that just concern Ford. For example, we have Troller, which is a Brazilian car manufacturing that does off-road cars. We can also see that there is an agricultural machinery manufacturers such as Versatile and Jetrag that is doing transmission system. And there is also two others. Yeah.
So I got carried away, huh? Okay.
Yeah, Spin.
There's one down here, right?
Yeah, the one down there, and then Spin just under Jetrag.
Oh, okay, Spin.
Yeah.
Sorry. Okay. So these are not automotive per se. They don't assemble cars.
Yeah.
Okay.
Then we go with Ford's mission statement. Ford's mission is to make people's lives better by making mobility accessible and affordable. So the three main points is make people's lives better, make mobility accessible. So make getting from one place to another accessible for everybody, making mobility affordable. So make getting from one place to another affordable for the people. So Ford's vision statement, our vision is to become the world's most trusted company designing smart vehicles for a smart world. So first is the worldwide scale. This is a specification of Ford's target market, which is the global market for automobiles. The next one is the most trusted company, of course, becoming the most trusted company. And then third is designing smart vehicles for a smart world. This implies to the industry's electric car trend. Then we go with the Abel model,
Abel's model,
Abel's model,
right? You're going to tell us anything about it?
in the following slides.
Okay.
So Abel's model, who does Ford serve? Ford serves a range of customers within the automotive sector, and their main target is the middle-aged group. Then we have the sales of vehicles, parts, and accessories to its worldwide networks, such as like the Ford and Lincoln dealerships. And Ford also sells vehicles to automotive and parts distributors and fleet companies, such as rental car providers, government bodies, industrial and contracting companies.
Yeah, the Ford's nature from its beginning has been to serve what you might call the common person. Ford traditionally doesn't make real exotic or elaborate cars or real expensive cars, and they don't make cheap cars. They make cars that are in the middle and try to appeal to the majority of people in the market rather than those that buy very inexpensive or very expensive cars.
So now you have unmet customer needs. So you have things such as quality and price. So Ford is always trying to get better quality and at a decent cost. Then you have fuel savings, so mileage from conventional vehicles. So Ford is always trying to get the best for the environment, trying to not pollute it so much. And safety, of course, there's always improvement that can be done for safety. And Ford is also making trucks for all uses and purposes, such as pickups and vans. Ford has traditionally produced cars and trucks for the majority of the population.
Right.
So how does Ford, what's it called? How does Ford achieve these unmet needs? Ford relies on global network of internal and external experts to ensure that they have a wide-ranging, comprehensive perspective on customer trends. So how will these things affect the consumers? These trends are applied in the following to guide future product and technology development. They're applied to the marketing, the product development, and the research and designing organizations. So experts use intensive research to analyze and understand what the customer values and what they want in a vehicle. Now we're going to talk about some history. 1903 was when Ford initially incorporated. Then we go to 1904 when Ford first achieved its status of international. So it was when Ford first opened up in Canada. And then we go to 1908 when Ford created the first Model T. And then we continue, and it's just where Ford begins to expand overseas. Can we go to the next slide?
Sure, the picture on the right is the first assembly line where the Model T was assembled, right?
Yes, sir.
Okay.
Then 1981 was when Ford introduced its first worldwide car, which was the Ford Escort. And then we can see after that, Ford acquired other businesses such as the Jaguar, the Aston Martin, and the Volvo, but it ends up selling them, as we can see.
So they acquired all these sexy cars like Jaguar and Land Rover and Volvo and Aston Martin, but at the end, Ford had to divest them all because they couldn't handle such a variety, right?
Yes, sir.
Okay.
Here we can have a quick organizational chart of the company. And as we can see at the top, we have the executive chairman, followed by the CEO and president, James Farley. And then all of the different divisions of Ford are reporting back to the presidents. And every division has his own vice presidents and engineering division, engineering section, financial section, etc. And to finish the background of Ford, we can have a quick look at the 5-year trends of Ford. And what we can see right away is that Ford financial are not that great. They reached their highest revenue in 2018 with $160,000 million before it dropped to 127,000 in 2020. When looking at the operating margin, we can see that's been falling consequently, and that can be related to having a high leverage as well, because the two of them usually go by together. And then
That's a nasty looking operating margin trend, isn't it?
yeah. And then the invested capital trend has been increasing, but that's mainly due because Ford is mostly made of debt, and their debt has been increasing over the years.
Right.
Here's just a quote that I thought was kind of interesting. It says, what makes this company different is that Ford has a higher purpose. We serve others and improve lives. We try to make the world a better place.
That's nice.
And now we're gonna start looking at the environmental assessment and the economics. On this slide, we can see Ford's geographic market position. And what really stood out when looking at the graph is that Ford is depending heavily on North America and Europe. And China right now is only coming in third, and their revenue has been decreasing in that part of the world. And we can really say that Ford should invest heavily in China because the growth is there right now, and that part of the revenue should be way higher than what it is as of today. This slide talks about the gross domestic product in the major markets for Ford. And what is important is that in 2015, China's GDP overtook the United States. And that if you look more to the right, we can see that the gap is widening. And this is another argument to say that this is where the growth is right now. And as we know already, China is obviously the largest economy. Here is another slide about the gross domestic product, but for different region groups. And it's important to note that the Asian 5 does not include China. And when we look at that chart, we can also say that the United States is Ford's biggest market right now, but China is the world's largest auto market, and Ford should, as I said already, invest in China.
Right. So the gray, the ASEAN 5, does not include China, these are the other Asian countries besides China, right?
Yes.
Okay.
And here we can now see the GDP per capita graph, which measure a country's economic output for each person living there. And we also say that it's used as a barometer of relative consumption potential, which allow us to compare the potential consumption that citizens of one country can have compared to another one. And as the graph shows, people in the United States are able to buy and afford more products and services than people in China.
Yeah, so China may be the biggest economy, but it's not the wealthiest in terms of lifestyle or living standards, because there are just so many people to share that large economy.
Here is another graph that is looking at inflation. And the graph shows us that inflation has been stabilized and decreased a little bit over the years, which is a good thing because it benefits discretionary spending power, which is what is left over for people for unnecessary purchases, such as buying cars. And when the discretionary spending power is increasing, that means that people are going to tend to buy more cars because they have more money left over to buy cars.
Rather than groceries or shelter or transportation.
And now we're also looking again at the region groups, and we can see that it's been decreasing, and that it's also important to know that interest rates fluctuates with inflation.
Right. Okay. So that's an important point that Greg just mentioned. It sort of comes in last and we don't think about it a lot, but if inflation goes up, so do interest rates. And it's pretty logical, you know, if costs are going to be higher in the future, then interest rates, which reward the lender, have to be higher so that it is able to cover the higher costs in the future versus lower costs in the present. So if inflation, that is the increasing prices of goods and services, if the prices are going up in the future, then interest rates have to be higher to offset those higher future costs. So there's a direct relationship between interest rates and inflation. That's why in the news, when we hear inflation's going up in the US, if you look at the business programs, they all say, okay, interest rates are going to go up as well because they follow inflation rates.
And now we're looking at the unemployment trends. And when unemployment rates increases, auto sales potential decreases as well, because people are gonna get less income and they will be able to afford non-essential goods, not as they would do if they had a job. And we can see that in 2020, the United States unemployment rate increases greatly, and that was mainly due to the COVID-19.
Right.
Now we're looking at the demographic trends because we have the population graph, and it's important to note that China's and India population are still increasing today, and there are about 1.4 billion people there. It's also important to know that in 2026, India's population will likely exceed China's population, which makes that China is the growth market of the present and India will be the growth market of the future. Here we can have the exchange rates for 3 different currency. The first one shows us how many US dollar you can get with €1. And it's €1 is worth about $1.16 as of today. And when we look at the 2 others, it's the opposite conversion rates. So that means that we're looking at how many Indian rupees and how many Chinese yuan we can get with $1. And we can conclude that it's easier for Chinese car manufacturers to buy American auto components today because the yuan can buy more dollar. and other way around, it's tougher for United States companies to buy Chinese products. Here we have the automobile sales in the US, and we can see that there is two big decreases. The first one was from 2008 to 2010, and it was mainly due to the recession and the increase in the price of automotive fuels. The second one, it was in 2020, as we all know, because of the COVID-19. But it's also important to notice that the automobile sales increased from 2010 until 2016, because at that time the interest rates were pretty low and it pushed people to buying more cars, which eventually led to a record-breaking year in 2016. And after that, the market kind of saturates and the demand decreases. And that's why the sales have been decreasing starting from 2017.
Good summary on that.
Here we have the interest rates. And what is important is that when the interest rates are low, the cost of building or acquiring auto parts obviously becomes lower. And auto companies want the interest low to also be lower on new auto loan, because consumers will tend to buy more cars if their interest rates are lower as well.
Right. Okay, so the interest rate on the bottom is the interest paid by corporations for a high quality bond. And those interest rates have been coming down, which means that it's less difficult financially for companies to build new plants or acquire machinery and equipment for their plants. Yet, because the capacity of the most American operations is not fully loaded, even though those interest rates are down and as affordable as they are, purchases of machinery and equipment and new factories have been pretty modest. The chart on top explains what Greg was talking about earlier. With interest rates nice and low, as they came down, auto sales came up. But we can see here recently that interest rates on car loans, and that's what that chart on the top is, car loan interest rates, they've come up pretty much. And that had a depressing impact on car sales. Sales didn't increase very much at all during that time. But now that times are rough, interest rates have come down, and perhaps that'll help auto sales pick back up. So far, that has not been the case.
Now we're going to talk about the markets. As mentioned earlier, Ford serves a range of customers within the sector. And again, the main consumers are those in the middle age, which are 25 to 54, and then young men and women ages 16 to 25. In this slide, we can see how this population group is really where our main target is at. And if you look at China's population group, it's a lot bigger than the USA.
About 4 times as big.
Yes.
It's even twice as big as Europe, all of Europe, which is much bigger than the United States. And yet China is twice as big as Europe's key age group or largest age group. And surprisingly, India's is also quite large, but there's a big difference between India and China, right? Because India's economy isn't as advanced as China's, and so the GDP per capita, the consumption potential in India is low, and so these charts are a little misleading if you're judging market potential just by the size of that 25 to 54-year-old group. India is not like the US, Europe, or even China. So the real cheesecake is in China.
Here we got major competitors in market share in the US. Ford's closest competitors in the US are not only the US car makers. Looking at the chart, we can see that there was a decrease in market share from 2017 to 2018. And that decrease in market share could be related to Ford inability to be strategically aggressive.
Okay.
So major China competitors in market share now in China. So as we can see, China is pretty low. Actually, I'm wrong. China's pretty high, but foreign car manufacturers are struggling in China. Chinese and US brand shares decreased because China's economy was having a slowdown. But shares of Japanese and German auto manufacturers increased significantly.
Yeah, and that's really quite remarkable. We say that the sales of Chinese auto manufacturers and US auto manufacturers in China decreased. Yeah, maybe it's because the Chinese economy was slowing down. But maybe it also was because those companies didn't respond to market conditions. The Japanese and Germans certainly weren't held back by the slowdown of the Chinese economy. So if you're a marketing person in the auto industry, that difference between the Japanese and German manufacturers and the rest of the auto producers is really noteworthy.
Here we have a chart that it shows Ford's quarterly vehicle sales by region from the top 3 marketers they have. And from the looks of it, we can see that Ford is that USA is Ford's largest market. And from 2017, 2020, for China, you can see that it had a major downfall and it's struggled to go back up. But this was from their products. They were just like not modernized. They were not really innovating, whereas their competitors were bringing new innovative vehicles to the market.
And the decline in the United States is really remarkable. We see over on the left some 700,000 cars in one quarter, and on the far right, 475. So really a dramatic decline.
You can go to the next one. This is what I just explained.
Now we're gonna get into the industry structure. We're gonna start by looking at the major competitors of Ford. And by looking at the graph on the right, we can clearly see that Toyota is the industry leader by far. And Ford only comes at the fourth position on global automotive market share. And on the previous year, Hyundai, for example, was behind Ford, and now they're above them, which means that they've been bringing some innovation that Ford couldn't bring to customers. Here is a table that is regrouping Ford's major competitors and their financial results for the year of 2020. And what we can clearly see is that Ford financial compares to Toyota, for example, are really low. Toyota has the double of sales than Ford has, and Ford's operating margin and leverage is both really low and way too high for the industry, which means that Ford is not able to take initiative, and Toyota would be in the best position to actually bring an innovation and invest.
Really interesting to note whereas operating margin is the lowest in the industry, leverage is the highest, and Toyota's operating margin is among the highest, and its leverage is among the lowest. So maybe there's a relationship there. There is.
Now we're gonna look at a comparison between the 5-year revenue trends of the Ford and its competitors. And on the graph on the right, the light blue is Toyota and the dark blue is Ford. So you guys don't confuse the two of them. And Toyota clearly has the highest revenue. Ford and General Motors are following the same trend. It was increasing until 2017, 2018, and then it started decreasing again. And when we look at Tesla, we can see that their revenue has been increasing, which means that they're going to be a threat in the future for Ford. Here is the operating margin trend. We can see that Toyota has been pretty much constant. It's been decreasing a little bit, but not as much as Ford, for example. Ford went from about 12% of operating margin to 3%, which is really low. And Tata has the highest operating margin of the industry.
Rather interesting. Tata, for if somebody doesn't remember, is the auto manufacturer based in India, but it has the majority of its operations not in India, but in other Southeast Asian nations.
Here is the invested capital trend, and Toyota is the highest. When we can compare Toyota's and Ford invested capital by saying that Toyota invested capital is mainly coming from equity, where from Ford it's coming from debt. And this is why, even though Ford invested capital has been increasing, it is not as positive as you can look, because most of it is coming from debt.
Good point.
Here is the leverage trend comparison. And as I've already said, Ford has the highest leverage of the industry, and Toyota one of the lowest, which makes them in the best position to be able to take initiative. Tesla's leverage has also been decreasing rapidly, which means that they've been putting some efforts into trying to decrease that. And when the leverage is high, the growth potential is low.
Right, because they're choking on that debt. They can't invest capital in growth programs. They got to keep paying their debt obligations, the principal and the interest. So their cash gets eaten up in debt service rather than growth programs.
And this last chart is about the return on investment trends. Tata's return on investment is really high for the industry and is by far the highest. Ford has lost almost 15% of return on investment over the years, and Toyota and General Motors are almost following the same trends, but it's been decreasing over the years. And Tesla return on investment has been increasing as their revenue, which really makes them a threat for the future, and Ford needs to look after them.
Yeah, Tesla's doing pretty well.
Now we can see an example of the BCG Matrix, which is used to analyze business units. And we're gonna start by identifying for Ford which are the stars products, which are usually have rapid growth and that generate a lot of cash. And for Ford, it would be the trucks related products. The question mark are products that have a high potential to grow. And for Ford, it would be electric cars and autonomous vehicles, as they're starting to look into it, but they haven't made a lot of profit due to that. The cash cow usually have a large market with a slow growth, and this for Ford would be related to the cars and SUVs. And then finally, the dogs would be Ford's acquisition, because they've spent money into acquiring a lot of firms over the years, but it didn't work out, and they had to sell most of them again, which means that they didn't make any cash out of it.
Good point. You know, Greg and I have talked about this case a little bit, and in one of our conversations, we observed that the cash cows are pretty big, cars and SUVs, not a lot of growth, so the profit ought to turn to cash. And the star everybody knows is Ford's trucks. They're famous for that. And it's a growing market. A lot of people in this room and in this university prefer to buy and drive pickup trucks rather than sedans. The real question is, if they're generating this cash and financing the trucks, which are growing so rapidly, you come up with a couple of questions. Why isn't Ford growing faster in total? And why does it have so much debt? Because it's got these cash generators and the star, which is pretty much financing itself. Why can't Ford get its debt down faster and start investing in some of these growth programs more? And it's an enigma because this BCG matrix says that Ford's got it pretty well set up, and yet it's not growing, and it's still choking on debt. It's a hard one to figure out.
Here we have another example of the BCG matrix, but this time it's for Ford's market. The stars would be Ford main market, which is the United States. The question marks are obviously the Indian and Chinese markets because they're growing rapidly and Fords need to make inroads there. The cash cow would be the European market as the growth is pretty flat over there. And then the dogs would be pretty much all the countries where Ford is not really present, such as in Africa or the Middle East. Here we just have a quick look at the industry life cycle. And as we can see, the USA and Europe are in the maturity stage, and China is in the growth stage, and India is just about getting into the growth stage. And it's another argument again for Ford to realize that they need to invest heavily in China and in India. Now we can take a look at a competitive map of the industry, and we can see that Ford is in the middle, having an average superior quality and an average price, and that is because Henry Ford wanted to create cars for the multitude, so he wanted to sell cars that everyone could be affording. And we can also see that Ford is clearly not competing with the likes of BMW or Ferrari, but that they're closer competitors of Toyota, Volkswagen, and Honda, for example.
You guys remember when we talk about Porter's 5 forces, what he wrote, if a company had neither low cost nor differentiation, stuck in the middle, right? And if you were stuck in the middle, the rates of return would be lower than at either extreme. And this is almost saying that that's the case for Ford. Toyota probably deserves to be a little further to the right on the quality chart, but this was such a well done chart. I didn't ask for the guys to change it, but the big part of the market is neither low price or differentiated by quality. And lo and behold, Ford doesn't have such spectacular numbers. So this may kind of bear out what Porter was telling us. Toyota is actually a little further to the right with regard to quality. And with regard to price, it may be a little bit lower.
Here we have some of the critical success and failure factors that could be impacted Ford. Some of the success factors are that they have a strong brand reputation and efficient channels of distribution. They're able to do some products with quality and they have technology knowledge. Joint ventures, if they're able to find some new ones, would be another success factors. And then India, this is just gonna depend on how they're gonna set themselves in the Indian market compared to their competitors, and that's why it is also a failure factors. If they're not able to do so and the competitors do better than them, they're gonna be able to gain market shares quicker than Ford. And some of the other failure factors include the high leverage that Ford has, which also lead them to having a weak financial position. They have high restructuring costs, and some of their cars are not aging well because they have not been able to bring some innovation regarding style or technology wise. And they're also unable to take risk due to their high leverage. Now we're gonna take a look at Porter's 5 force. Porter 5 force analysis is used to determine the profit potential of an industry. And it also shows the strategic priorities of a firm and what they need to do to neutralize or otherwise overcome the forces that are high or low in the industry.
Right.
Here is just taking a quicker, closer look into the analysis, and we can see that the competitive rivalry within the automobile industry is pretty high, as there is a lot of competitors. They compete not only on vehicles, but also on design and concept. The industry growth is flat, and there is a high diversity in products, which means that customers can pretty much find whatever they want, and the barriers to exit are also pretty high. When looking at the bargaining power of buyers, it's also pretty high because there is an important number of customers and they can decide to just find another brand if they're not happy, which means they can also easily switch to other competitors, and the price sensitivity is moderate. The bargaining power of suppliers is also moderate because there's a high number of potential suppliers and the switching costs are pretty high. The manufacturer depends on them for quality and compatibility of the equipment, which means that everything needs to work together. And on that part, Ford has been outsourcing the parts requirements to separate entities, which is a good thing. And the suppliers can leverage buyers to accept certain changes. The threat of substitute is also moderate because it is present, but it's not present in every single market. For example, when we look at ecology, maybe Europe is more concerned about ecology and there is more trams or subways than in the United States, where people want to use the car more than maybe the buses or just take the train. And that's why Ford has invested a lot in fuel efficient powertrain.
It's kind of funny. There's another team in another one of my classes that's looking at John Deere, and in their presentation on supplier power, on substitutes, they say the substitute for a tractor is a horse and a mule. You know, in some industries, there's really not much of a substitute. And in the US, we don't think that there are good substitutes for cars. But what's interesting is that when you get into other countries, such as I've been in the Czech Republic and the city of Prague, and everybody goes on the tram. Yeah, there are cars in Prague, but it's just amazing how many people use the tram, the public system. They go everywhere. They're very convenient. They're very punctual and reliable, and they're comfortable. And this is true in a lot of European countries. So although we think that there's not much of a substitute for a car here in America, that's not necessarily true in other parts of the world.
And finally, the threat of new entrants is pretty low, mainly due because there is a high capital investment required to get into the automobile industry. And this is the main threat. This is why the threat of new entry is pretty low. That's the main info.
For sure.
And here we have the Porter's 5-4 scorecard, which allow us to see which countries have the highest profit potential. And as the numbers show, China and the US have the highest profit potential. But since Ford is already dependent a lot on the US market, and it is one with the highest profit potential growth, they should focus on China now. And the European market has the lowest profit potential because the growth is pretty flat there. Now we're looking at the cage analysis, which compare a possible target market to a company's home market on the cultural, administration, geographic, and economic level. And what we can conclude from that is that barriers to entry are lower in established markets, such as the United States and Europe. But at the same time, the barrier to grow in those markets are way higher. And on the other side, the barriers to entry in China and in India are higher, but the growth potential is way higher than in the US and the European Union, for example.
Yeah, so we've got to look at the 5 forces and the Cage analysis. Cage tells us that, yeah, China and India are certainly the growth markets, but it's not as easy to get into India or China and to grow in those countries as it is in the more established markets.
And here we have Ofsted models of cultural differences, which is used to compare the differences between countries and how management should use them. And we can see that the takeaway is that management cannot use the same strategy everywhere. And if we look, for example, at the individualism and long-term orientation between China and the United States, it is clearly different. The United States are pretty high in the individualism category, which means that they value, they want something that is unique. They don't want, for example, the same car as everyone. But in China, they have a pretty low score. And that is because they have those social status in the country that kind of need to be respected. And China is more of a Me Too country. So the customers maybe wanted to have the same cars as their neighbors, but they're also looking more about the long term than the United States because they have a pretty high score there. So they're also valuing quality more, and they want something that is going to last like 5 or 10 years.
Good point. So in China, if everybody else is getting this model, I want one too. But in the United States, I want something different that lets me stand out. So for marketing and advertising, this can be very valuable information.
And here is just a quick summary to finish the industry analysis. As we've seen, and as we can interpret, the automobile industry is highly competitive because rivalry within the industry is strong. There is a lot of different buyers and they have a lot of power. So Ford must address supplier and buyer bargaining powers while looking at competitive global rivals. The threat of substitute is also moderate, and they need to look into the different markets to see if it is high or low. And the threat of new entrants is low because of the high capital requirements that is needed to access the industry. And what we can take away from that is that we can look at how Ford can do to increase their future profit. They can use the differentiation strategy while promoting new product development strategies. They need to find a way to enter new markets, such as India, with the likes of some joint ventures with domestic companies to access those markets more easily. And they also need to find a way to reduce their cost. Now we get into the capabilities analysis, and we're going to start with the financial trends. As I've said before, Ford is not doing well financially, and they need to find a way to fix it because their sales have been decreasing. And when we look at the operating margin, the return on investment, and the return on equity, the trend is the same. It's decreasing rapidly. And we can also see that it started before the COVID-19. So it was already there. It was already there. And then, as I've said, here we can have a closer look at the invested capital and see why it's been increasing, because their long-term debt has been increasing while their equity has been decreasing, which is why the invested capital has been increasing. And we can also see that the leverage has been increasing. They've been doing some efforts around 2013 to decrease the leverage, which dropped by about 15%, but in the most recent years, it's been going up again, and it is now at 78%.
Which is a little too high.
Here we have the critical success factor report card, which is used to develop a comprehensive assessment of a firm's competitive strengths compared to its different rivals. we can see that Ford is slightly behind Toyota and Tesla. So that means that they need to find strategies to get back in front of them. And it also shows that the rivalry is pretty high in the automotive industry, and that competitors need to be able to differentiate from others, and to find strategies to do something different and propose something to the customers than others are not providing.
Okay.
We just have a quick look at the strength of Ford, and some of them include that they have a strong brand image, a global supply chain, the quality of the products, they have a commanding market position in the United States market, and they have strong research and development strategies, mostly on the engines, and they're using market differentiation to avoid some of the risk. On the other side, the weaknesses include major recalls resulting in server losses. Ford has had to call back some cars and send it back to the factories because they've had some issues with it. They have an expensive international manufacturing due to the differentiation strategy. They rely on the North American market too much. They have a low level of innovation, a high leverage, and a weak financial position. And the rivalry is pretty high also within the industry.
Greg, your throat must be getting pretty worn out. This is a long presentation. You're doing a great job. Sometimes a slide like this and the one before it, the words are pretty legible, and the folks can probably read them okay. In a situation like that, you might mention one or two of the items that you think are especially interesting, but it's not necessary to read all the words if you don't want to. But that's your option. I don't want you to stop what you're doing. Just be aware that it's not necessary to read the whole slide if you don't want to.
Okay, sure. And here we can have another look at one of the graph that Lazaro talked about before. And it is included over here because there is direct relationships between Ford's financial and their vehicle sales. If their financial are that bad, it's because the sales have been decreasing, as Lazaro said, in the three biggest markets of Ford, which is the United States, China, and the European market. And it is the same constant when we look at the market share by region. It is also been decreasing in the three biggest markets of Ford.
I'm really struck by the reduction of market share in China. But when we look at Europe and the United States, the market shares are somewhat resilient, maybe a little softness, but nothing like what's happened in China. That's unfortunate for Ford.
Yeah, this slide we have already seen it before, and it's also serving as a reminder. So we can move on.
Okay, of where the manufacturing locations are.
Yes.
Okay.
And that takes us to Ford's allocation of responsibilities, and they operate under a global matrix structures with three main principal divisions that are Americas, Asia Pacific, and Middle East, Africa, and Europe. And as we've seen on the organizational chart before, each division has its own presidents and vice presidents that have to report back to the CEO. And every division are supported jointly by corporate units such as engineering, research and development, and finance, etc.
And that's what makes it a matrix. It's got these three divisions, but those divisions don't have all the capabilities that an independent business requires. So engineering, finance, research, some marketing functions are provided from corporate. And so we have this business where the functions interrelate, and that creates this matrix, which gives Ford the ability to conduct projects and bring many functions together when they're needed at the same time. But it also creates this multiple boss problem. And so you got corporate officers at different levels giving instructions, and those instructions sometimes may not be consistent with each other, and that can create a pretty tough situation internally.
Now we're gonna talk about goals and the position on the goal hierarchy.
Okay,
Here's a chart of what those goals look like. You can go to the next one and I'll elaborate more.
okay, well, Ford today, Ford's goals, have a priority of improving financial results, right? It's not that we forget about market position, or even risk because of that leverage. But Ford's got to get its financial results up, and that's the number one priority, right?
Yes.
Okay.
So here's where, well, Ford's stands in those. So we start off with acceptable risk, which is high leverage ratios. And this could indicate that Ford is using debt to finance its assets. And this could be risky because this could lead to a bankruptcy. Then we have long-term debt, which is increasing. This could be a risky thing, but it could be a good thing because it allows expansion. Then we have superior financial results. We start off with the low profit margins. This means this could be a good thing because it means that there's much higher, that the good that they're making is higher than its cost. So if the
Remember
company-
that your arrows are pointing to the label on the goals hierarchy. So Ford does not have superior financial results, does it? It has low profit margins and low rates of return. So with regard to that standard for success, Ford isn't making it, right?
Correct. So now we have the favorable market position. Ford had 13.87% of the US market shares in 2020 and 2.45% of the market shares in China. Now going with the long-term growth, partnerships recently closed in the Indian and Chinese market and developing new capabilities such as the electric vehicles.
Okay, so what's your takeaway when we say, when we're talking about long-term growth, how well is Ford set up for long-term growth in India and China? Not too well if its partnerships just had to close.
Yes,
Right.
correct.
They don't have local partners there anymore. So what you guys have done here is identify what considerations need to be made when we're talking about each of those levels on the goals hierarchy. So in addition to superior low profit margins, we again would actually have to go back and look at long-term debt. It's so Ford is either challenged to achieve acceptable financial risk or get its financial results up. And you guys appear to have made the decision that, based on everything you've seen, you're going to give them credit for not having to get past acceptable risk because of the high leverage, but they've got enough of a balance sheet, they've got enough operations that we're just going to bring them over into financial results and say, okay, now what we've got to do is get profitable, because if we get profitable, we'll generate cash in order with which to pay down that debt. So you guys have put Ford at the level of having to pursue superior financial results. We don't think they're going to go into bankruptcy, although that leverage is scary for sure. Okay, let's see, we're off to financial goals, right?
Yes, sir.
Okay.
So looking at the financial goals, Ford wants to reduce cost and improve quality. Also, looking at the sales, we can see that there was a decrease from 2019 to 2020, which was due to COVID-19. And for the future, Ford wants to develop electric vehicles. A good example was the all-electric F-150 that they had just manufactured.
Yeah, when we look at the sales chart, and we see where Ford was last year and where it hopes to be this year, that's still pretty deep in the trench. But the goal is to get not only back where they were, but to get back on the growth. And so to go from something like 140 billion to 160, and then 165 billion, that's really going to be an accomplishment if they can do it. And the same thing is true for the operating margin. Look how much improvement Ford is going to have to make to achieve these goals.
Ford plans on reducing their long-term debt in the future.
And to improve the return on investment. Okay.
Yes. So Ford wants to increase shareholders' equity invested in their capital. So by putting this, they could either put more money into the company or hold on to profit. And
Yeah,
Ford,
invested capital is going to be flat, even though equity is going up because debt's going down. They're going to offset each other. So if the invested capital stays flat and the profit goes up as is forecasted, then the rate of return on invested capital is going to go up.
now looking at the leverage ratio, we can see that Ford's leverage has always been higher than its competitors, and that they need to decrease it over the years to be able to respond to their competitors' actions.
Yeah, they really do.
And now we can have a look at the financial goal summary table, which takes everything that Laszlo just said. And we can see that Fords want to increase their sales by $28 million. They want to increase their operating margin as well as their return on investment while decreasing their long-term debt and increasing shareholders' equity. They also want to decrease their leverage, and all the different changes in amount and in percent that we can see on the right are Ford's financial strategic objectives. And this is what they want to achieve for the future.
Just to make sure everybody heard what Greg said, because this is the kind of thing I might put on a test. But you see those changes? Okay, those are the objectives of Ford's strategy, right? Those are the financial objectives of the strategy. They are strategic objectives, okay, for the 5 years between 2020 and 2025. Pretty ambitious, $28 billion of sales, knock down debt by 10 billion, increase the shareholder value by 13 billion. That's 38%. So sales go up 20%, but net worth goes up by 38%. And that's because we're getting more profit on that sales. So these are ambitious objectives.
Now we talk about competitive position. Market share of Ford in the United States. Ford market shares in the US have been constant, and we can notice it that it slowly decreases after 2018. And this could be from dropping the unprofitable customer, so that it makes it look like they lose market share, but their profit is improving.
Okay.
Market share of Europe and market share of Ford in Europe. Ford's market share of the European market was 7.2% in 2018. And as well, you can see a slight decrease since 2015.
Well, we see a decrease in the UK, but an increase in Germany, which is interesting. And yes, overall, it's been pretty flat in Europe as a whole.
Now we have market shares of Ford in China. Ford's market share in China has been dropping constantly and significantly. This is because the Chinese economy is tough on foreign companies. Here we have the market position goals. Ford plans to have 40% of its global sales to be all electric vehicles by 2030. Ford wants to invest 30 billion in electric vehicles development by 2025. And on the right, we see a picture of the new Ford plant, the Rao Electric Vehicle Center, which is located in Michigan, Dearborn.
And it's going to produce what? The new
Electric vehicle.
all electric F-50. Wow.
And now we're getting into the strategy part of the presentation. And we're going to start by looking at Ford's generic strategies. Initially, Ford has been using the least cost strategy when they created the assembly line because they wanted to reduce cost while offering a price below their competitors. And after that, they also introduced the One Ford plan that consists of producing the same model, but in different markets. This plan has brought large success to Ford, but the Ford's competitor eventually caught up and they started to understand how Ford was doing. They started to do the same thing. And after that, Ford had to add the differentiation strategy as well. And today, Ford is trying to differentiate their products from their rivals, such as Toyota, Tesla, Honda, and all the other car manufacturers. And their strategic objective today is product innovation.
Now we move to the SWOT analysis. We start off with their strengths. The US market share here, if the market share increases, business is likely to have higher profit. The economical sustainability initiatives and product. Here, Ford is doing a good job becoming a carbon neutral company, and them investing into electric vehicles will really bring them up in the game. And having strong financials, so profitability.
What? We just said their financials are lousy. How can we say they've got strong financials? They've got astronomical leverage, declining operating margins, and low rates of return. Do we really want to call this strong financials?
No, but them moving forward with them producing electric vehicles could put them in the top.
Well, it could, but I'm going to help you on reduce that because eliminate that because for sure, this company does not have strong financials at present. Maybe if they do well with their electric cars, someday they will, but right now they don't have strong financials for sure. Go ahead.
So weaknesses, we have manufacturing process is high cost as compared to the industry, and they have struggling European operations.
And they've got really high leverage. You may want to make a little adjustment to the slide that you turned in, if you care to.
Here we have some opportunities. The eco-friendly vehicles are gaining more and more traction with consumer and fuel prices rising and decreasing. This could be a good opportunity because let's say gas prices increase, people are gonna want to shift towards electric vehicles, so Ford could sell more of their electric vehicles. Also, now some threats could be increasing input costs, so it just costs more to manufacture vehicles and get raw materials. And also fuel prices rising and decreasing could also be a threat because if they were to decrease, people would buy just any car instead of electric vehicles.
Okay, that it?
Yes.
Okay.
Manufacturing, production, manufacturing, assembly, distribution, and sales steps must be closely coordinated in the production planning process. So Ford has been able to leverage each individual step to make it one of the most powerful automotive producers and dealer networks in the world. Here is the list of Ford's internal value chain, which is product planning and design, logistics, raw material extraction, assembly and painting, sales, and service. Related diversification, Ford has expanded into heavy buses, tractor trailers, agricultural, big tractors, airplanes, and they even offered to finance all of the purchases through its own financing arm.
Now,
Ford take-
now the airplanes were way back in World War I. Ford doesn't make airplanes anymore, do they?
No, I believe no.
No, they don't. Okay.
So they take advantages of economies of scope through related diversification and capitalize on the opportunities afforded in tax, risk reduction, financial spoliation, all built around core competence and shared activities. Here are like the subsidiaries like Troller, Versatile, Cosworth, JIT-Rag, Spin, and Electrify.
Okay, and what do these companies do?
Some of these help Ford produce like those, like I listed on the first bullet.
What does GetRag do?
They do transmissions systems.
Okay, transmissions. All right, Lazaro, what does Cosworth do?
Cosworth is like a powertrain and electronic company.
Okay,
Now we can take a look at NSOF Matrix, which is used to plan the different strategies that the company is going to use for growth. The market penetration strategy has been Ford's primary strategy over the years, and they've been using it by bringing different upgrades or changes to their existing models, as well as a goal to increase the sales volume. Concerning the product development strategy, Ford is trying to bring new products every year. And this year, they have been bringing the new Ford Bronco 2021. The market development strategies is when Ford decide to expand into new markets like India or China, for example. And they are doing so by using existing vehicles that would be adapted to the customers' preferences of those countries. And by doing so, they would be able to get information on what customers likes, and they would use those information to develop new products for those new markets in the futures. And finally, the diversification strategies is for now bringing electric and hybrid vehicles into new and existing markets.
for sure.
And this is the same matrix as on the previous slide, is also NSOF matrix, but now we're looking at future products that Ford could do. Concerning the market penetration strategies, it would be to add Ford's products in every single market, reinforce their dealer network in each nation, and use exciting and media advertising and joint marketing with the different dealers. The product development strategy wouldn't be to make an electric version of all of their existing vehicles. The market development would be to create Ford dealership in new countries where Ford is not present or not well represented. For example, they could decide to go into Africa or the Middle East. And then finally, diversification could be to create a new transportation mean. I know that BMW, for example, they have both cars and bikes and motorbikes, and they could use the Spin subsidiary, which is now launching electric scooters as a mean to diversify.
That's interesting.
Now we're looking at implementation priorities, and Ford has been taking some actions. For example, they're now looking at electric vehicles, and they've recently done an agreement with Volkswagen for a share of product and technology. Ford is going to build 2 cars that are going to serve for both Ford and Volkswagen is going to build 1 car that is going to be used for both Volkswagens and Ford. But at the same time, Volkswagen is going to share their electric technology with Ford. And so they're using the competitive advantage of both companies to gain an advantage together. Ford is also looking at autonomous vehicles right now, and they have a partnership with Argo AI, which is making autonomous driving systems, and Lyft, which is a car sharing app. And they intend to launch self-driving vehicles on the Lyft network by the end of 2021. They haven't done so, so I guess it's going to be around December, or maybe they're going to report it for early 2022. And this would be Ford's first step toward commercializing self-driving vehicles in the future.
Pretty amazing.
And how Ford will implement those strategies. They've been doing a joint venture with Shanghai Automobile, which is a Chinese car manufacturer, to produce the new all-electric Ford Mustang Mach-E. And they've also made China a new individual entity in their corporate organization. And they want to focus on China with Chinese specific products. And they also want to make it a new design and manufacturing center so that their Chinese part would have more importance. And it's also important to mention that recently, the joint venture that they had with Zoti, which is also a Chinese car manufacturer, has been called off. And this could be bad and dangerous news for Ford.
That's too bad, but I'm very impressed the way you pronounce Zochi, because I don't know where you picked that up, but that's how you say it in China.
And Ford could also try to do a joint venture or a partnership with Tata Motor, because early in 2021, Ford and Mahindra also had a joint venture together, but they decided to drop it. And their goal of the venture with Mahindra was to launch new vehicles faster and at a reduced cost with lower investments. And that has left Ford without a way to enter the Indian market. So they could try to approach Tata to get more easily into that market. And recently, Tata Motors has finalized a deal to take over Ford's India car manufacturing plant in Chennai. So Ford will need to, we will need to wait and see how that will develop for Ford.
That sounds like quite a challenge for Ford in India.
Ford, to implement the different strategies, is going to either need to develop new skills or to consolidate its existing skills. An example of those skills could be having world-class engineering, developing electric powertrains, having a reduction in fuel consumption in the different cars, developing international marketing, and developing electric and autonomous vehicle knowledge to be able to be efficient. But Ford also need to look at which kind of leadership will be required. They need to look at their succession potential and who is going to be Mr. Ford's successor. As of today, they don't know, like there is no successor that has been announced so far, but they need to look for the future at which kind of qualification will be required, such as international marketing and operating experience are likely to be required. The leadership will need to expand and extend international management to increase the shares in the growth markets, such as China, Brazil, India, or Argentina. They will also need to strengthen the Chinese organization structure to develop higher market share and to strengthen the finance and treasury function to maximize internal cash flow and accelerate the debt reduction, because Ford needs to lower the leverage as it is one of their strategic objectives. They also need to prepare a long-range strategic plan for India, as it will be the growth market of the future. And they also need to specialize in electric and autonomous vehicles. And they could do so by recruiting engineers or that are specialized in this area, or developing a special production plan that would be focused on electric and autonomous vehicles.
Okay, excellent. We've got 2 slides left, but they just simply show the organization chart. Do you want to talk about them, Greg, or it's 20 after 3, so it's up to you. If do you have anything to say about these two charts?
Well, it was just to relate it to the leadership and to show that Ford's organizational structure is pretty complex and that they could definitely make some change to make it easier, and they could clearly find a way to make it more effective.
Okay, I'm glad you made that point. Ford's organization really is complicated, isn't it? Really is. This is the top level. This is the subordinate level. They're all, general managers or vice president, but it's a lot of people. Is that it, Greg?
Yes.
Outstanding, outstanding. Really, is everybody here, or did I hope nobody left? If they did, that's a real shame. 1, 2, 3, 4, 5, 6, 7. Did 3 people leave? Wow. What do you guys think? I think this was a great presentation. Really covered all the bases, stayed on the track, followed the organization that was given to the class to hit all the topics, and did it within an hour and 20 minutes. That's pretty impressive. Congratulations to Greg and to Lazaro. That was a really good job. Okay, so who's going to present on Thursday? Which one will that be?
It's us, Dr. Ronnie. Tesla.
Tesla. Okay. Did the Tesla people leave?
No, we're here.
Okay. All right. Well, I'll let you go. Those people who left early, I'm going to see if I can come up with a question about the end of this presentation, just because they weren't here for it. So I'll see you guys on Thursday. Again, just a great job by the Ford team. That was a super presentation.
Dr. Rooney, I just have a quick question.
Okay. Hold it. Let me see if I can stop the. Whoops. I better not do that. Looks like I'm going to end the meeting. Yeah. What's your quick question?
Can I schedule a meeting with you about the IMF as we? 'Cause we
Absolutely.
talked-
Do you want to do it right after this meeting?
Yeah, basically, that's all right.
Okay, I'll send you a link.
Perfect, thank you.
Okay, bye.